Hi everyone, delonewolf here. Welcome back for another EVE Online video. Today's video is going to be a discussion video because I want to take a look at the latest economic numbers for October. And if I'm not mistaken, I also prepared a couple of economic reports to try and compare things because I'm mostly interested in a couple of topics here. First of all, the resource crunch. It's now been almost a year since CCP announced that they were not happy with the incredible amounts of minerals that were produced in EVE Online, and of course they have been nerfing nullsec mostly very hard. And then in the latest update they gave highsec, lowsec and nullsec unique minerals that can almost only be mined from those spaces. So that's bound to have a pretty big impact on what's happening there. And then the next one, I also want to take a look and see if we can spot any trends when it comes to the trade hubs in EVE Online. So let's get started. If you want to read the dev blog for yourself, you can always go to eveonline.com, then you click on the news link, which brings you to the articles website. And down here you find the dev blogs with the monthly economic report for October 2020. I also prepared September 2020 for a comparison, and then April 2020 just to get a look at some of the charts from before the current or the latest resource changes that of course made those minerals unique to some spaces. So I'm going to try to not make this one too long. It's actually like my fifth take, and I usually go like towards half an hour, which I think is way too long. But let's get started here with production versus destruction in the month of October. So that's the numbers up here. This actually gives you a pretty nice perspective. And I would say that destruction in October was quite high. Now, no, that's not Detal. That is, of course, Delve, the Imperium, that is being invaded. And they're probably losing not just fleets, but also structures and infrastructure. And all of that is starting to show up here as a very nice bump. A little bit of a slowdown at the end, but we're still definitely in a pretty good spot if you like a lot of destruction in EVE Online. On the other hand, mining amounts, which is the yellow chart here, definitely towards a low point, and then the produced amounts also definitely towards a low point. Now, it must also be said, of course, that this is sort of what CCP wanted. They want loss to be more meaningful. That does mean that it has to be harder to mine stuff and to produce stuff. So it's kind of normal that these numbers are lower if you want loss to be more meaningful. Then next up, of course, you can definitely dive in here as well, especially if you are interested in nullsec politics and things like that. If I'm not mistaken, you can also find like fleet deployments on this if you look at some of the import-export numbers and things like that. But let's take a quick look at total destroyed value by region as well. And well, this kind of explains where all the destruction is. This is Delve at over 10,000 billion ISK in October. Next is Lone Trek, the Citadel, and then the Forge, so Jita, standing at around 2,000 billion ISK here as well. We'll take a quick comparison with the situation before the war and before the resource changes. Here is total destroyed valued by region. Number one, the Forge, suicide ganking in Jita, very popular activity, of course. 3.2 thousand billion is destroyed, down to around 2,000 billion, so that's definitely a lot less destruction. And then Delve, always high up there, right? 2,000 billion, not bad, but of course the war is exactly what's happening, and this really shows that when it comes to economic numbers, activities and big events in nullsec are always like so major that they become that they dwarf anything else that happens in the galaxy. That war is on a crazy scale. That's shown quite nicely over there. After that, what did I want to take a look at? This one right here, total mining value by region. And what do we notice here? The Forge, so Kaldari highsec, Domain, Amar highsec, Metropolis, if I'm not mistaken, Minmatar highsec, and then Sync Liaison, Galente highsec have the top 4 in mining amounts. Next up we've got Oasa. I do think that is nullsec, but if again we go and take a look at total mining value by region before the war and before the latest resource changes, number one Delft with 1,800 billion ISK, followed by Domain, The Forge, Syncliaison and Fountain, no, Metropolis is down here. Man, look at that. So what's quite noticeable is that Nosek Nerves had already been making it harder and harder. I'm not sure if you remember, but during the resource bonanza with the Imperium being able to mine under a massive super capital umbrella and having like endless respawns of mining anomalies, they would just blow everyone and everything out of the water. They would be larger than, I think, like the first 4, 5, 6 other regions combined. They would just outmine anything and everyone by massive amounts. So this was already in a pretty nerfed state, but Delft was definitely still #1 in the mining amounts because of the Rorqual, for instance. And that has changed completely because of the latest resource change. HiSec, when it comes to mining, is now king, at least when it comes to the values that are being mined. And I must say, we're already starting to see that perhaps we're going a little bit overboard in HiSec, because Tritanium is definitely the first mineral that is losing its premium. It's already back in the 7 to 8 ISK range, and it's given up quite a little bit of the extra price that all of the resource changes had given it. And so as a result, HiSec, sure, very popular, safe, and probably also something that the Nosek alliances are interested in, but not without its impact on the profitability of the activity in the space itself. And this actually leads me to speculate that this is part of the reason why the war happened in Dital, for instance, because they can't really just dominate mining anymore from within their own space. Now Nosek alliances, Nosek entities will also start to exert their influence in HiSec and in LowSec, trying to dominate those spaces to make sure that they have steady supplies of all of the minerals that they need for their own production. And of course, free ports, especially free ports with markets in those HiSec systems, is not something that they will tolerate. They want to basically be the ones in control of all of these supplies. You don't want neutrals, potentially enemies, to just have a place to dock up, do trading, ship back up, and disrupt all of your activities. And so I think that, yeah, this is just a big part of the political change as well, because now mining is being dominated by HiSec. Well, the Nosek entities have a stake in there as well, and they're not going to just let go of all of that either. So that's total mining value by region, total NPCs bounties by region. All right, I will quickly take a look at that. Oasa still definitely dominating with over 6,000 billion ISK, but of course the changes are coming, right, or have been deployed into the game and are coming into the upcoming reports for the next few months. The change to the ESS, the dynamic bounty system, all of that should flatten this curve by quite a little bit. And so I don't think that we have to basically worry that much about what's happening here. I feel like CCP is trying to balance things correctly. For about a year they've been hitting resource generation, the creation of stuff, by quite a bit, but it was a pretty big move with the ESS and with the dynamic bounty system. On the other side of the equation, the creation of currency, I think this is a necessary move to create to stop potentially hyperinflation in prices. So another one that I'm interested in is this one, of course. The other parts, first we got mining. Next up here, we've got market trade value by region. So here we're gonna go against September, of course, against last month. Here is the Forge, over 450,000 billion ISK, still dominating massively, of course. And then I'm gonna take a look over here. Produced total market value by region. You know, Jita above 400,000 billion, Jita above 450,000 billion. Feels to me like that one has increased in range, but it still dwarfs all the others, that it's very hard to make sense of what the hell is happening in these little ones. So from this one, we can definitely confirm that Jita is still massively dominating, but luckily CCP also presents us with the trade value by region, the Forge region excluded. And so here we have the domain, which is Amar. Then we have Delft, which is of course the Nulsec region that's being invaded at the moment, Zinc Liaison for Galente, if I'm not mistaken, and I think it's Metropolis for Minmatar. And then we are going to compare that over here as well. That could be interesting. Domain Amar above 50,000 billion ISK, and in this one above 55,000 billion ISK by a decent margin. So this confirms the increase in the size of the Amar market. Being so far away from Jita now because of the loss of Nyarja. It is there, it's just not, right, super massive, because Jita is just such a dominant force that it will create a lot of inertia in any potential changes when it comes to these trade hub dynamics. Don't expect Jita to just crumble because it is no longer the theoretical center of the galaxy. There's just so much stuff and so much trade already happening there that it's going to take a very long time for these evolutions to actually play out. But the trend here in Amar is very clear. There's definitely growth there. Next up, Zinc Liaison in September was at just below 25,000 billion. And now, ouch, heading towards 20,000 billion. So I'm actually reading this as Galente space suffering and probably being the explanation as to why Jita has grown. So why would you still spend time in Galente space, which is probably like one part of space that's like really far away from Amar and Minmatar? Well, things may just be moving towards Jita, towards Caldari space, and consolidating there. And then of course I also want to take a look at Metropolis, which in September was below the 10,000 billion mark, and now Metropolis just at the 10,000 billion mark. And I think Heimatar is also Minmatar space, and that is still basically in lockstep with Metropolis. So both of these are also growing. My read of these charts is Jita is still dominating and is definitely creating inertia. If you were expecting quick changes in the trade hubs, that is really not going to happen. But the trends, Amar growing, Minmatar growing, which is actually the region I'm going to visit next from my Orca, and then Galente actually decreasing in size. So not what I expected, but that is exactly what seems to be happening on these reports right here. After that, anything else that we still want to take a look at? I do think I wanted to take a look at the money supply here. So we'll quickly take a note of that. Almost getting back to a high. So previously we've been above 1400 trillion ISK. We're back there as well, but you can already see the hesitation right at the tail end here. I do think that again the change to the ESS and the dynamic bounty system is going to slow that down considerably. Wasn't there? Yeah, right here. Here are these numbers. Beginning of the month 1345, end of the month 1363, and that is with a negative ISK delta, which if I'm not mistaken is accounts that are considered to be inactive for these numbers, and potentially also bans. So this is just accounts and wallets there that are no longer counted, but the faucet's still at 113,000 trillion, something like that, and the sinks at 80,000 trillion. This one could definitely go down substantially in the next few months because of the changes there, which I think would be good, because that is going to potentially stop inflation, which I think is going to be our final stop right down here. Here are the indices, and you can of course see that the mineral price index is just going bonkers. Down here we've got a primary production index, which if I'm not mistaken is Tech 1 industry. Then the secondary down here is Tech 2 industry, and then here we've got the average normally consumer price index, actually pretty low. And I think that this mirrors something that I've been talking about during EVE Talk, is that the resource change that CCP has introduced is basically this right here, November last year, all the way up here from like 80 up to a 190. Now I couldn't exactly tell you how to interpret these numbers exactly. I don't understand enough of everything that happens below here to create these indices. But what I do think this shows is that minerals have been grabbing a lot of ISK, right? In order to keep trade going there, you had to pump more and more ISK into minerals because their prices just kept going up and up and up. You still had those massive reserves out there, so everyone was just trading hands, taking their positions, and that means an enormous amount of ISK going into minerals, which means a lot less ISK for everything else, like Tech 2, which is suffering at the moment, right? Advanced Smooth Materials, all of that stuff, definitely low prices. Consumer Price Index, I would count like PI and things like that, definitely down here as well. There is just what we see in EVE Talk, no demand for PI at the moment. There is no ISK to put into those markets. Everything is needed to try and or basically everything is going, not necessarily needed, but everything is going towards the minerals because that's where all of the action is. And then we have the primary production index, which surprises me a little bit, is actually down a little bit as well. So I would say if there's a potential here, it would be investing in Tech 1 because there could still be like a wave once this stops. This can't keep going like this forever. The impact could like move itself into Tech 1 as well, where prices might be going up. But I think that here, this is exactly what CCP was aiming at, increasing the value of the rawest resources first, which has, in my opinion, had an impact on the entire economy. And yeah, at the moment it's definitely a very interesting time, and I think that there will be some players out there that know a lot more about this stuff than me that will take massive advantage of a chart like this. There's bound to be pretty damn nice opportunities in all of this as well. So I would say very interesting times. I don't think that the resource crunch is necessarily over. That's also something that I quickly want to mention. One metric that I personally keep an eye out for, which perhaps CCP does as well, I have absolutely no idea if that's the case, it is the historical inversions. Normally you would go titanium being by far the most abundant per cubic meter, being the cheapest, then we get pyrite, then we get mexilon, isogen, noxium, and then the nullsic minerals. There had been some inversions. For instance, pyrite has been a lot cheaper than titanium for a long time. Now that just recently has flipped again. Titanium 7.8 and pyrite 15 to 17, I think, something like that. But mexilon and isogen still have to flip. And I've said it for a very long time. I think that isogen was the biggest casualty of this glut right here. Maybe I'll go back to this chart here. When the mineral price index was at its absolutely lowest, we were just making so much isogen that the economy absolutely didn't need it. It became completely worthless. And historically, before that glut, isogen was a lot more expensive than mexilon, and I think that CCP may be waiting for that inversion to be over as well, and that would be a sign, of course, that all the stocks that have been created during this super cheap period will finally have been absorbed by the markets, and I think that it could only be after that CCP will let go of that tightening grip that they have on resource creation at the moment. But of course, let's keep that in mind when it comes to ISK creation. CCP is not just forgetting that. They're not going to create runaway inflation in the game either. At the moment, balance changes are happening there as well. So overall, it's still very difficult to predict exactly what's going to happen in the EVE economy. I personally think that it is super interesting, of course. And I also noticed a video that talked about, well, CCP has to be a little bit careful to not only use sticks, you only need carrots in order to incentivize the player base to have fun and to play out there. And I can agree with that. You have to be careful. You have to try to already prepare for perhaps introducing new ways of creating stuff, of creating ISK, because right now, especially nullsec, does feel like it has been nerfed across the board. It's got this massive war going on, which of course may be a result of loss having more meaning all of a sudden, but you probably don't want it to become a barren wasteland either. And so yeah, we'll see what CCP decides to do. For now, minerals still seem to be dominating, but the upcoming months, look out for that ISK generation. That could be pretty big as well. And there we go, guys. That's going to be my look at the monthly economic report for October. Thank you very much for watching, and as always, I'll see you next time.